The first item on the agenda is the presentation of the annual financial report and report of the independent auditors. And we have them here, Plant Moran. If you want to introduce yourself by name and let the residents know who you are, what we're here for, and then we can get started.
Joe Kowalski with Plant Moran.
Good evening, Tim St. Andrew with Plant Moran.
Did you want to add something, Mr. Cotton, before they get started? Or
Finance
Mr.
Director
Blum?
Blum has a few words of wisdom.
No, actually, I was going to have some at the end, because I like to highlight a few things they don't. So they're going to do their presentation first. You guys can ask all your questions, and then when they're done, I'll probably have about less than 10 minutes.
Okay.
And we'll go from there.
Okay, thank you. So you all have the microphone here.
Thank you. I'm going to start out by just walking you through the letter that was included in your packet. And this letter is in draft form still. As you've probably been informed, the audit is still pending a couple of matters. And Tim will talk a little bit more about what's in the financial statements, what's pending, and walk you through some of the financial graphs as well. But this letter is really a culmination of the original letter that we sent on September 17th, where we communicated our audit plan to this body. And now we're reporting back to say what the results of that audit was. So the letter is in 4 sections overall. And the first section is some internal control related matters that we've identified during the audit. So we'll talk briefly about those. And then the second section is some required communications that audit standards require that we communicate to you as the governing body of the city. The third section, we have some other recommendations that are not really internal control related matters, but they are matters that would affect the operational efficiency of the city's departments. And then the fourth section would be some legislative items that are relevant to the cities in Michigan that we think you would be interested in reading. So just to kind of move on to the first item on that list, which is internal control related matters. On page 3 of the letter, we have summarized that the scope of our audit, and this is just sort of a reminder for what we communicated originally, is really to put an opinion on the financial statements themselves. And so when we do that, we have to design audit procedures, and part of those audit procedures require that we gain an understanding of internal controls and that we test some internal controls, which then helps inform how we'll test some of the balances that are in the financial statements themselves. So but we're not putting an opinion on internal controls. We are required as part of our audit responsibility that if we come across something that we think is an internal control deficiency, to report that to this body. And so that's what we're here doing today. And so on page 3, there's a couple of matters that we want to talk about. And there's a level of severity that we are required to identify for each of the internal control matters that we think are worthy of reporting. And so the first level is material weakness. And so that is a more severe than the other one, which is a significant deficiency. And so we have one of each. And so to put it in a nutshell, a material weakness would be an internal control matter that we think is important enough to address immediately because it is the type of internal control matter that could result in a material error in the financial statements.
I'm sorry, excuse me. We have people in the audience that took the time out at 6 o'clock to hear us. Do we have a copy for them to go by?
Do you have an extra copy?
Can we get them a copy so they can follow along if they took the time out to hear us and have something following along?
I think it's us.
Okay.
My email to Mary. Or do you know who he is?
Thank you. We'll be getting you a copy shortly. I just want, while you're talking, they can be following along with us.
Understand.
Okay. So since majority, he's part of our finance department, so he kind of already knows the gist of it, so we can keep going forward. Thank you.
Okay, thank you. So the first item that we're reporting is during our testing of cash, we noted that the bank reconciliations weren't performed timely throughout the year. And so to us, that's a very important internal control. And as a result of the bank reconciliations not being performed timely for the entire length of the year, there was a batch of deposits that wasn't deposited timely. And so those two things together rise to the level of what we would consider a material weakness in internal control. And it's our understanding that management has already addressed this matter and have addressed it to catch up on all of the bank reconciliations and address the process going forward. The second item that we have on the letter on that page is the significant deficiency. So this is less severe than a material weakness, but it's still a matter that we believe is important to bring to your attention. And so during our testing of payroll, we noted that there's one individual who could add an employee to the payroll system and then also edit their banking information. And so we think that poses a risk of some wrongdoing. And so there are other mitigating controls that would catch that wrongdoing after the fact. But we do believe that the segregation of duties at the front end is an important control. So we wanted to bring that to your attention as well. So if there's no questions on the internal control deficiencies, I'll move on to section 2 of the letter, which starts on page 4. And so this section of the letter is really just all of our required communications with you as the governing body. And so I'm going to kind of walk through them a little bit quickly, and if there's any questions along the way, feel free to stop me. So the first thing that I want to talk about is the qualitative aspects of the accounting practices. And so in our viewpoint, management has selected accounting practices that are of the highest quality. They are using GASB, and it's our expectation that when we get to the point of issuing our opinion, we will have a clean opinion on that set of financial statements. Secondly, just want to draw your attention to some of the accounting estimates that will be in the financial statements and that are reflected in the draft statements that you have. The most significant of those are the estimates related to OPEB liabilities and pension liabilities, unbilled water and sewer charges, and then other IB&R. So management comes up with an estimate for how to record those matters. We review those estimates and test the amounts and the methods used to come up with those estimates, and we've come to agreement with them on the way that those have been recorded. Also want to just point out that in our opinion, the disclosures in the financial statements were neutral, consistent, clear. They are in accordance with the standards, and they are representative of what we would commonly see in a city's financial statements. We did not encounter any difficulties in performing the audit, and in fact, we received full cooperation. So really would like to thank Randy and his team and everything that they do to provide to us the audit requests throughout the audit process. Little editorial comment, I'm a former finance director, and so I know how painful it can be. And I think that, in my opinion, it's harder to be audited than to audit. And so thank you, Randy, for everything that you've done to help us get through that process, and Nick as well. Corrected and uncorrected misstatements. As a part of our audit, we are coming across a couple of things that management believed were not material errors, and then we looked at those and agreed they were not material, and therefore they were not recorded or reflected in the financial statements. So the first one is in the Major Local and Streets Fund. There was an accounts payable and expense that was not recorded by approximately $6,000 and $3,000 respectively. We do not believe that that is a material matter, and so those remain unrecorded at this point. The second item is in the water and sewer funds, and which then also affects the entity-wide statements. There is a in essence, a gross up of expenses, which should be, from an accounting perspective, a deferred item. And so those are basically then running through the current year. Am I saying that right, Tim? They're running through the current year as opposed to being deferred over a number of years. And so, again, based on the amount that that is and the type of entry that it is, management determined that to be not material. We agree with that determination. So management's representations, just a reminder that we do receive from management a letter to us at the end of the audit process that is representing that they've provided to us everything we've asked for. They've told us everything truthfully and honestly, and that they've recorded everything to the best of their ability in the financial statements. We're not aware of any consultation with other accountants, which is an important required communication, and it basically means there's been no opinion shopping. There is some other information in the financial statements that we don't put a full opinion on, but we give an opinion on in relation to the financial statements taken as a whole. And so it's important to read our opinion carefully as it identifies those sections of the report and then refers back to the tables of contents as how they're labeled to see which areas we're putting a full opinion on and which areas we're only giving an opinion in relation to the statements as a whole. So that takes us to section 3, which is other recommendations, and just a couple of things that we noted. We have them in 2 categories. One would be general matters, and then the other one, information technology related matters. So again, these are matters that could strengthen internal control or create some operational efficiencies, but we do not believe they rise to the level of control deficiencies as defined by the audit standards. So the 3 items we have there, the first one is for P-card transactions. We believe that a review by an individual independent of the P-card process would assist in preventing and detecting inappropriate P-card activity. So this is not to say that we found any inappropriate P-card activity. This is just to point out for the process, we think that those duties should be segregated. Another matter is we're just simply recommending that a periodic review of the vendor files takes place. This is a common issue, not just for cities, but for many entities where there would be duplicate vendors or vendors that have no recent activity with the city, and that those vendor records should then be kind of cleaned up. And then during the testing of cash, we also noted that at certain times, the finance department may have to handle the deposits physically, and we think that that's a process that should be segregated and handled by somebody that's not part of the finance or accounting function. Information technology controls, we have a couple of matters there. The first one is that the user access reviews be performed at least annually. And so to determine that people have appropriate access based on their duties. And so there are controls that we tested and noted during the audit for setting people up and removing people, and there's appropriate review and approval during those timeframes that people have set up and removal. But what we're also recommending is that you layer onto that with an annual review to make sure that if duties have changed, that the access rights in the system have changed accordingly as well. And then lastly, this is a matter where we are just simply bringing to your attention that we have noted in the marketplace that there have been a rise of cyber attacks. We have clients that have been a victim of cyber attacks, and that it is a matter that this body, we would recommend that you have that conversation with management to make sure that you're comfortable with the approach that management has over mitigating the risk of cyber security. So on page 8, section 4 starts, and so there's a number of items in here that we think are useful information to you as related to the state of Michigan and some of the rules of state of Michigan. But I'm going to ask you to flip all the way to page 14 because the items preceding that in that section, if you read it and you have questions, we'll be happy to talk about it. But I want to highlight the page 14 and 15. These are new accounting standards that are coming up, and so they're things that the city will need to implement in the upcoming years. A couple of them will have a little bit more impact than the others. And so GASB 84, which is upcoming next year for the city, is one that will require a little bit of extra work from Randy and his team to determine the impact of that. And we will provide some training, and there's already been some webinars that we've provided on that topic of accounting for that, and then we'll do extra audit procedures over that as well. GASB 87 would be accounting for leases, and that is actually going into effect the following year, but it is one that at the beginning of the next year, you'll need to begin to prepare for implementing that because there could be big changes as well. GASB 89, interest incurred during construction, is actually a really easy one. Just simply to stop capitalizing interest, and so it actually makes things a little bit easier from an accounting perspective. And then GASB Statement 90 would be in effect the following year, and there will be an impact to the city based on some of its relationships that will impact the way that they account for those relationships. And so we know that Randy has already started thinking about that impact, and we'll be providing some assistance in that thought process as well. So that concludes my summary of the letter. And now Tim, I know, has some points related to both in the body of the financial statements and then also in the presentation graphs that you have.
Thanks, Joe. So any questions on the letter before I move into the actual financial statements? Okay,
No.
so as I go through these, as we get to certain highlights, I'll flip to the graphs so we can stay on the same point, and I'll continue that. So some of the points, it's going to be a high level. There might be other things I just point out to you. Other things we'll go into detail. I want to make sure that I spend the time in the right place. So as we're going along, if you have questions or if you want a little bit more information, please stop me along the way, and we're happy to be flexible as we go through this. So as Joe had mentioned, these are draft financial statements. I do recognize that you just received these yesterday morning, and I'm sure you haven't had time to read through all 95 pages. So it's going to be at least a week or two before we finalize these. So as you go through them, if you do have questions after this meeting, our contact information is in the letter, so feel free to reach out to either of us, and we'd be happy to cover those questions. The main item that is open is the sanitary district audit. So that is a significant component within your water and sewer fund. Once that audit wraps up, which we are expecting 1 to 2 weeks, we can then book your equity interest in that entity and finalize the city's audit. All right, so we'll start off on page 10. So this is what we refer to as the full accrual financial statements. And this is different than the general fund, the modified accrual basis that you're used to, and that's how you budget. This basis of accounting includes all long-term items. So on here, you're going to see your long-term assets, so your capital assets, your buildings, your cars, equipment, infrastructure. It'll also include the long-term liabilities, which as you go down about halfway through the page, you can see the liabilities. The two largest ones I wanted to point out would be your net pension liability. And if you go all the way across to the third column, as of June 30, 2019, the city had a net pension liability of $44.3 million. The line below that is the net OPEB obligation, which is your net retiree health care obligation. And at year end, the city's obligation was $34.5 million. So very significant liabilities. On the pension side, and we'll get to this later on too, the city is 48% funded in the pension system. On the retiree health care side, the city is 21% funded. In the first column there, the column headed governmental activities, if you go all the way to the bottom, I just want to point out in the net position section, you can see that there is an unrestricted amount there of negative $61 million. And it's actually the line below that I want to point out. The total net position is a deficit of $30 million. And so what that tells you is that if you liquidated everything that you owned, all of your assets, largely based on cost, but if you liquidated everything and paid off your liabilities, you'd be $30 million short. So fortunately, this is a long-term picture. So the reason for that deficit would be your pension liability, your retiree healthcare liability. The expectation isn't that those get paid off tomorrow. You do pay those off over 20, 30 years. And so keep that in mind when you look at this, that it is a deficit, but it's long-term. If you can jump to page 13. So here we have our governmental funds balance sheet. Unlike the one I just went through, this balance sheet doesn't have any of those long-term items. This would be more consistent with how you budget. And so when we get to the income statement, it's really what did you bring in, how did you spend it? So you won't see any long-term capital assets, long-term liabilities on this balance sheet. The general fund that we show here does include the tax reversion fund. And so GASB statement number 54 would require that those two funds, or that the tax reversion fund is merged into the general fund for financial reporting purposes. And if you go all the way to the bottom here, I just want to point out a few things on the fund balance section. So there are 5 categories of fund balance, 4 of which are used here in the general fund. So the first one is non-spendable, and we have a few categories there. The assets held for resale, which would be your tax reversion properties, prepaid expenses, and a long-term receivable, which is the advance that the general fund made to the motor pool fund. So those are non-spendable. It is fund balance, but as the word implies, you can't spend them. So they're not in liquid form. We then have restricted fund balance, which really is only focusing on this page. The major and local street funds would have restricted fund balance, so that fund balance can only be used on major and local streets. Committed fund balance, you can see the general fund has quite a few categories here. Most of these are based on the city's fiscal plan that was adopted by council. And so there are calculations that are done each year for the pension and OPEB, the actuarial required contributions. Those are based on the contributions as required or as calculated by the city's actuary. The budget stabilization, operating reserve, and the emergency reserve are based on a rolling 5-year average of revenues multiplied by a set percentage within that plan. And then we have the assigned fund balance for capital projects, which I believe is the amount that was budgeted for capital or to be moved to a capital fund in 2020. And then what's left over is the unassigned fund balance, and it's really what's left to be spent at the city's discretion. So at the end of the day, the city and the general fund did end the year with $12.4 million in fund balance. And if you move to page 15, this is the income statement. So the revenues and expenditures. I'll focus on the major and local street funds first. If you go to the third line from the bottom, you can see that the major street fund added $737,000 to fund balance at the end of the year. The local street fund added $744,000. And so with these two funds, it really is largely dependent on the projects and the timing of the projects. And so these funds, we tend to see fund balance fluctuate a little bit more than the general fund, so it's going to go up and down based on those projects. In the general fund, and again, this includes a tax reversion fund. So the page I have you flip to next, which will be the general fund budget to actual statement, it's going to look a little different because that is just the general fund. But the two funds together did have a $375,000 increase to fund balance. And if I can have you jump to page 60 briefly here, I think this will help.
You said 60 or 16?
660.
60, thank you.
So this is our general fund, just Fund 101, budget to actual statement. You can see here in the third column with actual, and if you go to the third line from the bottom, the general fund, the true general fund, increase to fund balance was $501,000. That was $2.2 million ahead of budget. So the city's amended budget would have had the city's general fund using $1.7 million. So you can see here you were under budget. On the expenditure side, most of it has to do with personnel. And so you would have budgeted for almost full employment or almost full employment, and that's just not the case. There's also, there was $471,000 budgeted for transfers to the equipment replacement fund that did not occur. And so the combination of those two items would have resulted in that budget variance. Any questions on general fund before I move on to the water and sewer activity? No? Okay. Okay, then we can move on to pages 17 and 18. And actually, before I move on there, I apologize. Why don't we, forgot all about the graphs. If you want to, we can flip to the graphs here real quick just to see the trends in the general fund revenue and expenditures. So page number 2, slide number 2 here is the general fund revenue, and we have a 3-year trend here. And you can see that over the 3-year time period, revenues are increasing in the general fund. Large increases would be seen in the SMORSA line item, property tax line item, so that it's simply due to taxable values in the city increasing. And in this past year, taxable values were up almost 4%. The rest of these are fairly consistent when you look at it over the 3-year period. There is one line item at the bottom, operating transfers. And so what that is that equipment replacement fund, which was a fund that was set up through general fund transfers in the past, was actually merged back into the general fund this year. And so that remaining equity in the fund was moved back into the general fund. So that's what those transfers of $536,000 represent. On the next slide, we have our general fund expenditures. And again, here, as you go through each line item, no real significant variances. The one that does jump out would be public safety, and that is up almost $2 million this year. Most of that is the additional $2 million that was contributed into MERS this year. The vast majority of that, 70 or 75% of that, was allocated to public safety. So that's the main reason for that increase. And again, on the bottom line there, operating transfers out, you'll see that we had activity in 2017 and 2018. That was largely the transfers to the capital project fund. There's nothing in 19 because that fund was brought back into the general fund. Slide 4 here is the general fund balance. Really it shows that you added $375,000. I don't think I need to cover much there. Slide 5, I cover that's the fund balance classifications under GASB 54, so it gives you a picture year over year on the different classifications of fund balance and what made them up. Okay, so I think with that, we can jump back to pages 17 and 18, which is the water and sewer fund and the garbage and rubbish collection fund. I think we can look at these together. So I know the last couple of years, you guys have made an effort to really, especially with the water and sewer fund, to increase the cash position, build up the financial condition of this fund. So if you recall, if you go back last year and even 2 years ago, this was in a cash deficit position, so it actually had to borrow money from other funds to really survive and operate. And this year, so you can see you are in a much better position. So on the cash and investment side, you did end the year with nearly $3.2 million of cash and investments on hand. Going down to the very bottom there of that column, there is unrestricted net position of $7.2 million. And so you did improve in that category as well. One thing to point out that this is largely due to less spending on capital. And so if you were to go back to 2015, the capital spending in the water and sewer fund was $6.6 million. In 2016, it was $7.1 million. And then down to 4.2 in 17, 1 million in 18, and then 1.6 this year. So that effort to increase that financial condition, it worked, but it was at the expense of capital spending. So one thing to keep in mind that is, as you begin to increase that capital spending, that may change this picture a little bit. So you're going to eat into those cash reserves, you're going to eat into that unrestricted net position. And so with this fund, I would encourage you, as you look at it, it does have to be a long-term outlook. So you need to look at what your capital plan is, what your rates are, what you want as operating reserves, and make sure that it all fits into what your plan is and where you'd like this fund to be in terms of financial condition. The garbage and rubbish collection fund, so that is in a deficit of $38,000, so small deficit, but that is entirely due to the investment in the South Macomb Disposal Authority. And so part of that authority, there are landfills, there are post-closure costs that result in a significant liability that has to get recorded. And that, if you were to kind of work your way up through that column, you'll see a negative $2.2 million up on that investment line. Most of that is the city's share of that liability, which is driving this fund into a deficit. So it's a deficit. There's not a lot you can do about that liability. It really is what it is, and it's something you'll have to live with every year within this financial statement. Okay, pages 21 and 22. This would be your fiduciary funds. And what I want to point out here, in the pension and other retirement benefits trust funds, this is just your retiree healthcare fund and your death benefit fund activity. The pension fund is not included with this. Because that's administered by MERS, that does not get reported within your financial statements, just the city's net pension liability and various footnote disclosures. So the assets aren't included here. But as you can see on page 21, the city does have $10.4 million of assets, most of which is invested in pool investment with MERS and various equity securities and debt securities. On page 22, you can see there's a line, a fourth or fifth line, under additions. The city did contribute almost $3 million into this fund, most of which, or all of which, was for retiree health care. Moving down, you'll see on the deductions, health insurance premiums. Of that, $2.5 million was paid out in benefit payments. So overall, these funds did have a net increase of $453,000 for the year. Okay, and with that, I'm going to jump in and just point out a few things in the footnotes. So on page 35, about 2/3 down the page, at the bottom of note 2, the city did have two funds that ended the year in a deficit: the district court building fund in the amount of $123,000 and the capital improvement fund in the amount of $83,000. And there was a non-compliance with Public Act 2 of 1968, and that is due to the district court building fund being budgeted for a deficit this year. So Public Act 2 doesn't let you budget a deficit, and so that'll be something to keep in mind for 2020, is to make sure all funds have a positive fund balance at the end of the day. Page 39. This is going to be note 5, your capital assets. I just like to point this out. The table on top here is your governmental activities, so this will be your non-water and sewer activity. In the additions column, you'll see a subtotal for $2.38 million. So the city this year invested almost $2.4 million into the city's infrastructure, so the roads, the sidewalks, buildings and improvements, machinery and equipment. And then moving down in the business type activities, as I mentioned before, you can see that the city invested $1.6 million in the utility system, so the water and sewer system. Pages 41, 42, and 43. I'm not going to go through all of the detail. Again, I like to just point this out. This would be all of the city's long-term debt activity. You can see there's quite a bit of activity here. Most of it is debt issued by the county, so either for Lake St. Clair or the 8.5 mile relief drain. So debt that's issued by other entities but allocated to the city. And really what I want to point out is on page 43, about halfway down, there was $37,000 of new debt issued this year that was allocated to the city, and a little over $1 million of debt that was paid off by the city. And so you continue to pay down your debt, make the payments as they come due. Okay, and the last two things I want to point out, one was on page 50. So we talked about the net pension liability. That was the first thing I pointed out. It was $44.3 million. So on page 50, the table at the top here, this is a sensitivity analysis that's performed by the actuary. Now, these net pension liabilities and net retiree healthcare liability, when I get to it, these are really big estimates performed by the actuary, so there's a lot of assumptions that go into it. So it's not an exact number. I can tell you at the end, it's not going to be exactly what they tell you it is. It's going to fluctuate year over year. One of the largest assumptions that the actuary makes is the discount rate, which is tied to the investment rate of return. And MERS right now is using an 8% discount rate, which equates to that $44 million liability. And what we show here is that as they increase or decrease that discount rate, your liability is going to increase or decrease with it. And this is especially important because MERS recently notified the participants that they are reducing the rate 40 basis points. So next year, actually in 2 years, their assumption will be 7.6%. So it's not exactly dollar for dollar, but if you were to look at, if they were to reduce that rate 1 full percent, your liability would go up $9 million. So if you take 40% of that, and it's, again, it's not dollar for dollar, but it should be pretty close. In a few years, your liability will go up $4 to $4.5 million just because of that one assumption change. So that's going to have a significant impact on your net pension liability or net funding standpoint, and in the long run, it's going to impact the amount that you have to contribute into the system to make up for that additional liability. And if we look at, I'm going to skip slide 6, if we look at slide 7, I think this really tells the story here. So this shows the historical pension and OPEB, pension and retiree health care contributions. So the pension is going to be the orange line, and we have history dating back to 2009 and going out to 2024. These are the projected contributions as determined by MERS. And you can see it's pretty dramatic what that increase is. And it goes up to just over $7 million in really 4 short years. And so that's something to keep in mind as you continue to look out and do any type of 5-year plans, 5-year forecast, keeping that in mind, because when you take pension and OPEB, it's going to be upwards of 40 to 45% of your budget. And so as you need to make those additional contributions, other areas of your budget you'll need to look at to make sure that you can continue to balance it. On the retiree healthcare side, the blue line, that's actually relatively steady. Now, the actuary only went out to 2021, so we made some assumptions going out to 2024. But the reason why you see the 2 different pictures here, one being flat, one being up, is largely due to, on the pension side, MERS is amortizing your liability over 20 years, whereas on the retiree healthcare, it's over 30 years. And so you're having to make up a lot more ground on pension because you're having to pay it off over a shorter time period compared to retiree healthcare. Okay, and then similar sensitivity analysis on page 55. On the top table here, you can see as that discount rate goes down, your liability will go up. And discount rates, this is a countrywide issue. Everybody's looking at them. We don't really ever see them going up. They're only going down. And so I would say as you look at this, I'd always stay to the left of this so you know what your actual is. As you're looking out, assume it's going to go down over time. So that means a higher net OPEB liability. And the middle table there, this is the retiree healthcare cost. So right now the actuary is assuming 8.5% increases in healthcare cost, trending down to 4.5% over time. Now as those healthcare costs go up or down, so as they go up, your liability goes up. If they come in less than expected, your liability goes down. And so again, these are our big estimates that will change over time. So that's the extent of what I wanted to point out to you. Happy to address any questions that you may have.
Counsel? Well, I know I sat with you earlier yesterday, and we went through these figures, and I know council has the opportunity to, I know you extend that to the rest of council too. And so I know they read it as well. And afterwards, if you guys have any questions, even the residents, if you have any questions for Plant Moran, you're welcome to ask them some questions as well. And Mr. Blum, I know this is where you can chime in.
Yes, Madam Mayor and Council. If they have no questions of Plant Moran, I'll throw my 2 cents in. I always like to highlight certain areas. Some of them are the same, but from a different perspective, and other ones are just totally different. The first thing, if you went to page 15, back to that, one thing I would point out there is the Chapter 20 drain debt. You will see that the fund balance went from $55,000 up to $841,000. We did a large millage rate increase on that particular drain debt, intentionally to increase the fund because $55,000 was nowhere near what it needed to be. Fortunately, expenses came in a little bit lighter than anticipated, so this year the millage rate dropped, and we plan on using up about $200,000 of that fund balance through that rate reduction. But we want to keep a fund balance because we know there is additional debt that is staring us in the face. The Chapman retention basin expansion is currently projected at about $32 million, of which Eastpointe is 54% of that. So that is a pile of debt heading our way. It will be here in the next couple of years, and we want to make sure that we can kind of cushion the blow to the residents by not having a drastic increase in millage to cover that. The other item I'd like to point out on the same page, we've already talked general fund, but I wanted to go through a couple different items. Some of this is for council, some of it is for the unions, so because they will be watching. You do notice that we increased fund balance by $375,000. If you work your way up the page, $535,000 of that was transfers where we closed out both the capital improvement fund and the building authority capital fund. That money came into general fund, but it is designated for capital projects and that are already planned and will be spent this fiscal year. So it's not like free money that came into the general fund. The actual operations was a loss or a use of fund balance of $160,000. Of that, $472,000 was capital projects we did not do last year that had been budgeted, planned, and we did not finish those. That is part of the assigned fund balance you saw in the balance sheet of, again, it's projects that will happen. It's timing of when we're going to spend the money. So it's not available, I guess is the best way to look at it. $635,000 was people cost, where we had budgeted, planned on spending, and didn't. That money is already spent because we brought before council the proposal to make an additional contribution to MERS, and that happened in October. So that's money that's already been spent. So if you look at all the, I'll call them timing issues, we actually used $1.1 million of fund balance when it's all said and done. And I just want to make sure that the council and the unions understand we're not in as good a shape as that number projects. It's kind of a timing, a little bit of smoke and mirrors due to some transfers, but I just want to highlight that. If you go to page 17, specifically water sewer, we already talked about the last year having a $423,000 cash deficit that has grown to $3.2 million in cash and investments. The large part, as Tim already mentioned, was that we did not spend money on capital projects that had been planned. The ready-to-serve charge generates $4.3 million a year for capital. We only spent 1.6, so 2.7 of the 3.2 million cash is capital money that we didn't spend. It's not an operational cash, I guess is the best way to describe it. If you back that off, operational cash is about $518,000. That's what's generated from water and sewer usage charges versus the expenditures. The minimum operational cash should be 15% or $2 million. So we're still about $1.5 million shy of our operational cash needs. The preferable level, based on the water rate study that was done, is 35%, which would be $4 million. So we still have a ways to go to build this fund back up to where it needs to be to make sure that it is solvent going forward.
I thought we said 25 to 30 before. We said 35%.
Was it 25 to 30? Okay, well, we'll go 3 million instead of 4 million. Either way, it's a big gap.
And where's the, well, yeah, where's the, I don't know if I just can't see on here, the 3.2 million?
If you go to up the very top, the cash and cash equivalents plus investments, if you add those together, it's 3,213,000.
Oh, okay, just those first two lines.
Yep.
All right.
And that's the number that we would like operationally to be a minimum of 2 million plus whatever capital money's left over. If you switch, and this is kind of a big jump, but if you go back to page 74. 74. On that page, you will see there's a bunch of non-major special revenue funds. The one I want to focus on is the Street Lighting Special Assessment Fund. It ended the year with almost $127,000. That was money that we had planned on installing new lighting throughout the city. We had identified 60 locations that money was going to go into. None of the lights got installed. The biggest roadblock was we have to get an easement to go from the backyard power line to the front yard where the street light's going to be, because we're going to have a live wire going over somebody's backyard. The process to do that was to contact 60 homes and get 60 easement agreements, and it's one that's been worked on in the city manager's office for a while, but it's kind of bogged down just because of that. So that's one reason we actually have the money left over. But that's a good thing, because as we got into this audit year and into October, it came to a realization that we have already passed year 3 of our 3-year special assessment. The special assessment should have been renewed, but because we didn't realize it till October, the process needed to start back at the end of July to have time to get it through the whole process of getting it approved so we could put it on the December 1st tax bill. On the winter tax bill, there will be no street lighting special assessment, which means this fund will be in a deficit at the end of fiscal year 20. And when we get into budgeting and capital discussions, we're going to have to decide how we want to proceed. If we don't renew this, the money comes out of general fund, and that's about $250. It's actually climbing, so it might be closer to $300,000 a year, which 2 cops, 2 firefighters, take your pick. We would have to start cutting costs to make up that difference. We will talk about it more, but I just wanted to give you a heads up that that will be a next year issue, both from a closing of the financials and from a discussion on the special assessment.
When did the 3 years end? You said the 3 years already ended?
Yeah, that was my reaction when I
Approved it that long
realized.
ago?
Yeah, it covered 16, 17, and 18, and we did not get it renewed in time to put it on for 19. So
Okay.
it's one of those things that kind of fell through the cracks with change in administration. So it happens. But we'll get it fixed. Actually, something else came up. Hold on. No, that's fine. We already talked about it with the contribution to MERS. Okay, so that was really all I wanted to highlight. Again, similar things, but from a slightly different perspective, and that's all I have in case you have questions.
I had one. It seems like the bank reconciliations has been a theme for quite a while.
Correct.
Like, how have we not fixed that?
Well, it has been fixed. If you recall, when City Manager Sabota was here, he brought in an outside group to change our process. That was supposed to make it easier for the person that was doing the work. The process actually is fairly simple, but the person doing the work still could not accomplish it and is no longer employed here, which is how we basically solved the problem. We will now have people that can do the work, getting it accomplished in a timely fashion. That will still be a note next year, just so you know, because it was not resolved by July 1st. You'll see that as a note, the same note next fiscal year, but it is resolved and will not occur after that.
So then what are we typically, are you just like a month behind kind of thing? How does,
It's actually supposed to be reconciled within 10 business days of the close of the month.
so we're within 10 business days
Right.
now.
And, proof that we've got it figured out are the quarterly reports. You got your first one last month, and you will get one every quarter, and that's proof that the checks, everything's been reconciled, and that hadn't happened for a long time, and because of some of the problems, which have been resolved.
Okay.
Any more questions, council? Okay, moving along, we are going to item number 3 on the agenda, potential approval of the city manager contract. Mr. Cotton, you want to start this off?
Yes, I want to thank City Attorney Rich Albright, who's been in touch with the candidate, Ms. Elke Doom. I have as well. I have also been in touch with GovHR, who does the background checks, and I have all of them. You received the reference checks at the last meeting, and all of the background checks are positive. I have a copy here if anyone wants to look at them, and they'll be in her file. Should you make an agreement on this document, and should she arrive?
Okay, council, for discussion on the contract?
Sure. I don't know. I only had minor items, so if anyone had something of substance.
Want to start first?
Sure. Well, first one's so minor, I'm not even gonna mention it. Well, the first one let's see. Well, we'll figure that out at the end of the term. Hire, you said, Mr. Cotton, hopefully soon, essentially in that email earlier. The first thing was, sorry, I'm going through each page here. Vacation and sick time on page, oh shoot, these aren't numbered? Wait, my first page has a number.
Page 5.
First 3 pages are numbered. Four.
Fifth page.
Oh, fifth page is the first one without a number, okay. Seemed like a strange change for the, vacation, sick time, and other leave time. Does everybody do the same schedule that's not non-union, for time off? Like, I don't remember how we do it. Do you just get a certain amount of days on July 1? Is that why we had July 1 on here?
I believe that language was left over from Steve Duchesne's, which was actually on a fiscal year.
Okay.
And it was modified with Joseph's from a start date through an annual, but that piece was never caught and corrected.
Okay, so is that how everyone just gets it on there?
No, non-union, they accrue it on a per paycheck basis. It's so many hours per paycheck.
Oh, so
We do not get an upfront lump sum.
All right. Okay, that's fine then. I had no.
The language that's in there currently with the revision is what was in Mr. Sabota's contract.
Oh,
Striking the July 1st language, that was actually a carryover for Mr. Duchesne's contract. So what's in there under Ms. Doom's proposal is what is actually taken or pulled from Mr. Sabota's contract.
Okay. So is that, all these changes I was assuming was from Miss Doom, I guess? Are some of these from you
That's
then?
what I thought, too.
Oh,
Every-
okay.
Everything in red. A proposed employment agreement was sent to Ms. Doom last week, and on Friday morning, I believe, last Friday morning, she emailed me her counter proposal, and her counter proposals are in red.
So then none of the striking, or a lot of the striking I thought was, I don't have a color printer, so I don't know if mine's exactly,
Did
Like
you get a
yours.
copy of it today?
oh, okay.
That has the colors.
Oh, okay. It looked black and white since the first page has no red
There
on
you
it.
go.
Okay.
So when I was looking at a lot of her changes, they were just things that she took out of Sabota's contract. Like, that's what I noticed. Like, they were changes that we had made for Sabota in his contract, such as paying for ICMA, MML.
Yes.
You know, like that. It was something I believe we did for Mr. Duchesne, but it wasn't actually in the contract, so she just wanted to clarify it in the contract like Mr. Sabota did.
Yeah, and I think I did have, for the professional memberships one on page whatever, X, six, it just seemed like the wording, I think we can get rid of the first sentence, I think, actually, essentially, right, with the striking out.
Special membership.
Because, it says the city council, right, yeah. Like, we don't need the whole first sentence.
I lost you, Cardy. Excuse me,
Yes.
Councilmember.
On part X, on page 6.
Strike the entire first sentence.
Right, because aren't we crossed out most of the sentence,
So
and
you're-
then we made the second sentence.
So just start it with the city shall pay.
Right,
Right.
yeah, because the rest of that other sentence doesn't,
Yeah, the strikeout is Ms. Doom's part of her counter proposal.
wait, I think
And then
it's-
the strikeout and the red, and this is the part of the counter proposal.
wait, I thought you said a second ago the strikeout was, or the red was hers.
The red is what she's adding, the strikeout is what she wants to delete.
So she just wants it to be more specific than what we had in there originally.
Yes.
So, yeah, that's fine with removing that whole first sentence, because, like you said, it's not necessary with,
Yeah,
Right, no,
that's all. That's why I said there were just
Right.
a couple minor.
yeah,
And then the last one was just like, the last page, part 13. I think it's the same things already essentially covered in, section 2 on the first page. I think there was just like one minor part that could be, combined, right? Because, let's see. In part 2, it says if the manager wants to resign, just provide 60 days notice. I guess the only other thing missing would be the manager shall not take leave time off. It's just in 2 different places, that was all. I think it could just be probably all in part 2. That's really all, to make it simpler. But other than that, I thought,
I thought the counteroffer was
reasonable.
reasonable and acceptable.
I think so too. I
Yeah.
agree.
I don't like the part where she put, the manager shall be allowed to establish an appropriate work schedule. I didn't feel comfortable with that. I think I looked at a contract from someone in another city, and it told what time and what time. I don't want a city manager to make their own schedule and end up saying they can work 3 days out the week, 12 hours, and the rest they're off.
Yeah, this was wording, I believe, from Mr. Sabota's contract also, that she had taken out of there. Which I do kind of agree, because it was a concern for me when we had it at Mr. Sabota's also. But I do understand where she's coming from at the same time, because if she's gonna be here late one night, coming in a little bit later during the day on meetings days, like today, if she came in at 10 o'clock because she's gonna be here till 9, I think that was the idea behind it.
Well, I just think she's looking for some flexibility, depending on what kind of a day, what kind of a schedule that she would have. It may require going to Lansing, it may require, special meetings at nighttime. And so she ought to have that opportunity to have a flexible schedule.
Mr. Cotton, how do other communities tend to put this in the contract?
Usually I do that.
Oh, sorry.
Mayor Owens?
Go ahead, Mr. Cotton.
Yeah, I did want to note that there's a minimum work week here shown of 40 hours. So I think that's her intent, is to simply, not have to be here at 7:30 if she was here at 11 PM the night before, kind of thing.
I don't like the part where the manager shall be allowed to establish an appropriate work schedule. I don't like that part. I like the part that the schedule shall be appropriate to the needs of the city and shall allow the manager to faithfully perform her assigned duties. We do that anyway.
So what
And-
are you proposing? What-
We don't
exactly?
even need that. I mean, Mr. Cotton worked here and he lets us know accordingly what he needs to do. If he's not gonna be here, what meetings he have to go to. I don't think we have to really,
Maybe there's a different way to word it that would be acceptable. I think people are talking about the same thing, it's just the way it's worded.
Yeah.
Certainly, all managers I know have had some flexibility. Certainly, I've exercised it. Certainly, I encourage our department heads to a certain extent. You know, so it's kind of a standard practice among professionals. Maybe there's some better wording someone can come up with.
Do you have an idea how you would reword it?
Mr. Albright, do you have a suggestion in how to work this, other than her having control of how her schedule goes? That's what it
Sometimes,
sounds like a little bit to me. I mean, I want her to have flexibility, but right here is showing too much.
Do
sometimes,
we want to eliminate having a minimum 40-hour requirement, in that language, in the contract? And leave it more flexible? Or do we want to leave the minimum 40 hours in the contract and then add some, perhaps some language after that?
I think it's important to leave the 40 hours, and don't you, to make sure she works at least 40 hours every
Yeah, I
week.
want to
mean,
leave that
think
in
that's-
there.
Yeah, 40 hours should probably stay in there.
Madam Mayor.
But
Yes.
Oftentimes, there is a note that should the manager be out of the city for X period, and a day or something, that there's advance information given to council, to the mayor, to, you know, some other party. So there is some record of what's going on.
Yeah.
How about, the minimum work week shall be 40 hours, and there shall be no added compensation for hours worked in excess of 40 hours per week. The parties agree the city manager's schedule shall be appropriate to the needs of the city and shall allow the manager to faithfully perform her assigned duties and responsibilities.
Yes. The other part, strike the part where it says manager shall be allowed to establish an appropriate work schedule. I think we do that already, because I don't know what that means in her terms.
So we just roughly keep in contact with each other about well, I like a lot, Mr. Cotton, when you just send us pretty much your exact schedule, that was helpful, for sure.
yeah, well, that's pretty well established. The city manager notifies the mayor and the council when they're not going to be available, or, but at least he or she has that flexibility. I think that's important.
Yeah, I can be pretty
So do we want to
flexible.
insert that language then? Do you want me to read it again?
You can read it again if you don't mind.
All right, so we will strike the sentence that states the manager shall be allowed to establish an appropriate work schedule. That language will be stricken, and the new paragraph will read, the minimum work week shall be 40 hours, and there shall be no added compensation for hours worked in excess of 40 hours per week. The parties agree the city manager's schedule shall be appropriate to the needs of the city and shall allow the manager to faithfully perform her assigned duties and responsibilities. And then we'll keep the last sentence, which states the manager's scheduling of time at work, municipal facilities, meetings, and events is expected to be without maximum limitation, shall meet the needs of the city, its business, and residents. The manager shall not be paid any compensatory time.
All right.
Sure.
And the pay, she wanted 122,000. I didn't agree with that.
So the difference with us changing the car allowance and even her increase is $2,700 more than Mr. Sabota's contract per year, not including, I guess, you know, the percentages of 401K or 401A or whatnot will be slightly higher than if your pay is slightly higher. So, yeah, because it's 1,800 less than what we paid Sabota for the car allowance. It was, what, $450 a month, and now we're doing $300 a month if we go with what she suggested. So that's savings of 1,800 from Mr. Sabota's, and then, so, yeah, the math essentially comes out to, I think it's 2,700 more than our last contract.
Sabota was 17.5, correct?
Yeah, 117.5, yeah.
I was gonna go back to offering her the 117 based upon, well, in the beginning, I looked at her, she had jobs, held jobs for 2 years in different locations, and none of her population was more than, I believe, correct me if I'm wrong, 5,000 or 10,000. So And then, like you said, what we paid Sabota, so I just wanna,
So what are you suggesting, Madam Mayor?
$117,000. I'll let her
I'm not
keep
sure that's going to do it.
I'll let her keep the $300 for the car.
They what?
Because in actuality, you was gonna give her $117,000 with no car. So I'll give her $117,000 with the $300.
Well, that's definitely where I wanted to start. But
Yeah.
the $5,000 difference to me, she does have a lot of experience. I think she probably has more experience than Mr. Sabota did, coming in here as a city manager starting. And I don't know if it would be worth the risk of losing her, because I do think she's a highly qualified candidate for that small amount. But that's my opinion.
Well, that's what you proposed last council meeting was 117. So now you're saying she
I wanted-
deserves more, but she
I-
didn't offer that last time.
I do agree, I wanted to start at 117, knowing that she would counter. I did expect a counter from her.
Madam Mayor?
Sure.
One way to look at this is, on July 1st, there is a change for all of the regular staff. Do you recall what that percentage was?
There's nothing scheduled right now.
Well, last July.
Last July was 2%.
So the math, the 2,700 divided by 17.5 is just a shade over 2%. So that is money that was invested in other professionals and would have likely been invested in Mr. Sabota. So I don't know if it's really, in relative terms, an extra amount compared to Mr. Sabota. I do, did council get an email from me today? I can't see that it's sent regarding the background
Yeah.
check.
Yep.
Okay, yeah, we are still in a competitive market, and I just wanted to make sure everyone knew that.
Well, I'm not sure that, Madam Mayor, that we can go back and say that she was a city manager in a very small populated city. I don't think we are offering her a contract because of that. I think we're offering her a contract of her qualifications, which are incredible. And I don't want to, I agree with Ms. Lucido that I don't want to start all over because of a couple $1,000s. I don't want to have to go through this whole thing again. And so I think we got to look at her experience, what she has, and her knowledge, and what impressed us the most. And I just don't think 117 is going to do it.
Well, I wasn't impressed, but I say 117 and keep the $300 and then keep the language. And but that's just. Mr. DeMonico, like you have something to say.
Well, I just hadn't really added to this too much yet, other than the math at the beginning. Yeah, I think it's a reasonable counteroffer. I thought maybe it would have even been been a little different, and I think, yeah, I'm happy with everything that was in here, and if we can, because obviously we've done in the past a lot more negotiating back and forth and over, well, more minor items than we're even talking about right now. So I was happy to see this counter, and I'd be happy to go with 122.
Ms. Lucido, you have anything else?
I don't have anything else, no.
Madam Mayor?
Yes, sir.
December 2nd would actually be December 9th, because there's some technical backgrounds. Well, all the key background stuff has happened, but there's the physical and the TB test, and so the 9th is what would need to be the case.
I think we went over everything. So anybody else have any comments on it?
Madam Mayor, I did have one comment. Mr. Blum last week pointed out With regard to the one-time payment of $10,000, if Ms. Doom does move to the city of Eastpointe, Mr. Blum just wanted, and I know we had discussed it, that this would be a one-time payment. In looking at the language, it currently reads, in addition, the manager shall be paid $10,000 if the manager lives within the city of Eastpointe during the term of his employment agreement. Perhaps the language could be just tweaked a little bit, just to say, in addition, the manager shall receive a one-time payment of $10,000 if the manager lives within the city of Eastpointe during the term of this employment agreement.
Okay.
I think that's a good change.
Okay. And does the council want to put any type of time frame on there? For instance, we would, I assume that the council would want Ms. Doom to move into the city as soon as possible. But if it's beyond, say, the last month of her contract and Ms. Doom decides to move to the city, would that qualify? Because under the way it's drafted, it technically would qualify.
Right.
I don't think, it certainly isn't the intent of the parties, but we do have an opportunity to discuss it, so.
I don't know if I would want to do the, where she has to use it in a certain time frame, but after we give it to her, she has to reside in that, or be employed with the city for at least 2 years from that date. So otherwise, it would have prorated back over the 2 years on a proration scale. Would that make sense? Because, I mean, I don't want to force her to buy a house right away. It might take her 1.5 years to find a house that she likes. And hopefully, if she works out well, we'll be renewing this contract for another 2 years after this, so, you know.
Council agrees with that addition?
I was just gonna suggest, just to make it even easier, it's either, like, you'd have to pay the whole thing back if you left the city, as opposed to like a prorated, just to
That's fine, too.
make it
Either way.
even easier, and I think that'd be
Has to live.
better idea.
Live in the home for a minimum of 2 years, or live in the home for 2 years?
So, yeah.
Or that, those monies would have to be returned? Okay.
I don't want her to live there for 3 months and sell it either, so.
Yeah. Yeah, so I guess, 6 months in, moves in, and then would have to, even 6 months past the end of this agreement then, to keep the 10,000. That makes sense, right?
Any additional things, Mr. Curley?
No, I just want to make it clear, we have change in language under item 6, hours of work, and then we do have language change on the $10,000. Is that right, prorated?
Yes, sir.
Okay,
Well, I think we were just getting rid of the prorata. It was 10 grand if you stay the whole 2 years, and if you
Yeah.
leave before that, you gotta pay it
Okay.
back.
so a motion, if we made a motion, then we would I'd yield to the city attorney about,
As it stands right now, and I'll just go through, taking into consideration Ms. Doom's counteroffer and the city's response to that, on page 1 of the proposed employment agreement for city manager under section 2 term, the term would be from December 9th, 2019 and expire on December 9th, 2021. Also in that same paragraph, we're going to delete the section on the last page, manager notice in its entirety, but take the last sentence under that deleted section and add that after the sentence that reads, at any time during the term of this employment agreement, the manager may resign from the manager position upon providing the city with a written notice of 60 days or more days prior to the date of resignation. The manager shall not take leave time off during the transition period. So that's moving that sentence. So that would be for changes on the first page. On page 2, under compensation, Ms. Doom's counterproposal of $122,000, I believe is what was discussed. On page 3, under the same section compensation, but continuing at the end, or the top of page 3, the last sentence will read, in addition, the manager shall receive a one-time payment of $10,000 if the manager lives within the city of Eastpointe during the term of this employment agreement. And then I will insert language to the effect of that this city manager must live in the city for 2 years. Otherwise, those funds shall be returned to the city. Under hours of work, the second sentence, which reads, "The manager shall be allowed to establish an appropriate work schedule," shall be deleted. And the next sentence shall begin, "The parties agree the city manager's schedule shall be appropriate to the needs of the city and shall allow the manager to faithfully perform her assigned duties and responsibilities." No additional changes on that page. No additional changes on page 4. On page 5, no changes. On page 6, under professional membership dues and conferences, the first sentence, which states the city retains the authority to budget and pay the annual dues of the manager's membership, professional or civic organizations, city council shall deem necessary for the conduct of the duties of the manager, shall be deleted. The rest of that paragraph shall remain the same, as is the rest of the sections on page 6. And on the final page, again, the manager's notice provision will be deleted in its entirety. I believe that covers everything.
All right.
So moved.
One of the council members could make a motion to approve the proposed employment agreement for city manager as indicated by the assistant city attorney.
I'll make that motion of what our city manager had said. Thank you for clarifying that. So the motion would be, that I would make that motion.
Support?
I got a motion and support. Call the roll.
Councilperson Curley,
Yes.
Councilperson DeMonico,
Yes.
Councilperson Lucido,
Yes.
Mayor Owens.
No. Next item on the agenda is hearing of the public. This time, anyone in the audience would like to speak, you have 3 minutes. Please state your name and where you live. Hearing of the public is closed. Going to mayor and council report, starting with Councilman Curley.
Thank you, Madam Mayor. Just one really big thing, to wish everybody a happy Thanksgiving. And I would ask that everybody would include in their prayer when they have prayer at the meal to pray for all the troops that aren't going to be home to have mom's apple pie or to have an actual home. I'm going to get emotional. Forgive me. They're going to get a great meal, but they're not at home. And it doesn't matter if they're in Asia or in Biloxi, Mississippi, or wherever they are. Let's make sure we include them in our prayers, that they will be safe and that they'll have a great meal as well. Amen.
Amen. Thank you. Councilman DeMonico.
Oh yeah, just happy Thanksgiving to everybody, and really excited that we approved the employment agreement with Miss Doom. I look forward to hearing from her. And, well, I'm also excited Plant and Moran was here. I know they're not here anymore, but thank you to them also. Thanks, Randy, and everyone else that was involved in that. Thanks for a couple members of the public coming out. Probably usually nobody for an audit meeting. So, thanks, Madam Mayor.
Thank you. Councilwoman Lucido.
I definitely would like to take the time to thank Plant Moran for coming out this evening and giving us our audit presentation. It's definitely always helpful, and I know they always try to make time to meet with us if we have any questions about the audit or anything else. So I always definitely appreciate that. And I just want to take a moment to wish everyone a happy Thanksgiving, and that's all I have for this evening.
Thank you. I want to say thank you to Plant Moran for coming out, and the finance department for doing so much work for us, and doing a great job, Mr. Cotton, and Mr. Albright, Mr. Fairbrother as well. Before I end something, did you want to add something? Because you always do.
Yes. Thank you, Mayor Owens. There's a possibility of getting a very large grant for this park if you would like to set a special meeting as an additional agenda item tonight. I believe 9 a.m. is the best time being talked about for Friday, December 13th, for a short public hearing according to the Macomb County criteria associated with the CDBG grant.
Okay, 9 a.m. then?
Yes. All right. I understand that Joe Marucci, who's working on this, has talked to some of you, and if that works for you, that works for us. While I have the mic, I just wanted to make a short report that. Oh, gosh, thank you. I turned that off. That
Read
Kim.
everything.
Yeah. Special meeting if you're going to act on that. Kim Homan has agreed to come on board. She'll be starting next Tuesday. That relates to my schedule, so I'll be here when she begins. And given what you just acted on, and if Ms. Doom executes the agreement, then my last day would likely be December 18th. That's a Wednesday, the day after your second meeting in December, unless you have any other thoughts. And after this meeting, I think it's a good idea if the attorney would call Ms. Doom. I think she is getting other calls from other communities, so it would be nice to, I think, make a call that make her aware that council action is over, or perhaps the mayor, one of you two as the best party, I think, to give her a ring, if you would, after the meeting.
I'm going to send the email tonight with the changes.
Oh, okay.
So do we need to, Mr. Albright, do we need to do a motion on this time or anything like that? Since we're saying a notice of public hearing for the public, do we need to do a motion on that?
So it can be scheduled.
So what time, everybody said 9 o'clock, correct? Is good for them, except for Mr. Monaco. He
Yes,
doesn't
yeah,
do that.
I won't make the meeting, but since you three can make it, I'd suggest we do that.
Okay, Councilwoman, did you want to make that motion?
Definitely. Madam Mayor, I will motion to schedule a public hearing on December 13th, 2019 at 9 a.m. for proposed improvements to Getz Park, followed by, along with council meeting.
Can I get support?
Oh, support.
I got motion and support. Please call the roll.
Councilperson Lucido,
Yes.
Councilperson Curley,
Yes.
Mayor Owens,
Yes.
Councilperson DeMonico.
Yes.
Madam Mayor,
Yes.
all four of us had great comments at the end of this thing here, but all of us forgot one important thing that's going to happen on Monday at 7 o'clock.
Well, I wasn't done, Mr. Curley.
Weren't you? Would you mention? I didn't say what it is, so mention that. So good for you. All right, there you go.
Well, before I get to that, I want to talk about Donna's Restaurant is having a free Thanksgiving dinner. They did it last year. So come out, they closed the restaurant down and just open it to the public, so you can't buy any breakfast, they're not even selling anything. Just come and eat from 11 to 3 p.m. And I'm asking council, as a collective, elected body, to come with me and, as, part of the community and serve the community and let them see our faces, not just up here, but out there too, working for them, not just up here, but out there too. And then going to Mr. Curley's announcement is December 2nd is the tree Christmas lighting that will be here. So I'm really excited about that. And so bring your family, friends, neighbors, people that's listening out that are from neighboring cities, come out and have a good time with us.
Yeah.
We always have a good time. We have the Oddfellows, we have music, we have the Eastpointe High School that comes out and sings. I added some additions last year when we had the saxophonist. He actually moved to California to be live his dream as an entertainer, and so he won't be here this year. But we have a young lady that I met when I was campaigning, and she goes to DSA and wants to be a part of the event. So hopefully she talked to Anthony Lipinski, who's over that, and she's a part of it. And so we just want to get more people that live in our city who have talents and give them the chance to have a platform to use those talents. We actually have a young lady who's a part of the Detroit choir that went to America's Got Talent that lives in Eastpointe. So we have a lot of talent here in Eastpointe, and I just want to make sure we display it and give them the chance. So saying that, can I get a motion? Oh, and I'm
Actually,
sorry.
Mayor,
Go ahead.
what was DSA? Sorry, you said DSA?
Was it the Detroit School of Arts?
Oh, okay. And then did we have students flipping the switches on? I was wondering.
I don't know about that. I just know when some of the youth or people want to come and do something, they asked me, and I just talked to, you know, Anthony, so I think today was the last day to put everything together, but it's probably not too late if you want to add additions and things like that, so.
Well, I'd say we invite that Detroit Youth Choir student.
I wanted
young
to.
woman, see if she's free on Monday.
Yeah, I thought about doing that, but it's sounded so last minute and things like that, so, you know, and I think she probably wanted to come with the group.
Sure.
And they're probably performing for Detroit, so, so I let someone that, you know, is, who want to really do it, and she expressed her interest, and I think I'm gonna give her an opportunity, so. Saying that, happy Thanksgiving to everybody. If I see you at Donna's, that'd be great. You can eat with the council and your mayor. And if I see you, December 2nd, you're gonna be at the Christmas tree lighting with all of us as well. So have a happy Thanksgiving, and can I get a motion to adjourn?
So moved.
Support.
I have a motion and I have support. Please call the roll.
Councilperson Curley,
Yes.
Councilperson DeMonico,
Yes.
Mayor Owens,
Yes.
Councilperson Lucido.
Yes.
Meeting adjourned. I love it. Thank you. I'm glad you're getting some money.